So PLTY paid out this past week, paid out a very nice distribution, and we're going to go over that and also show my share average currently that I have on PLTY. And then we're going to show how the distribution rate that is shown on the website is calculated to help you better understand what that percentage rate actually means. Hello my friends, this is Legend. So PLTY paid out this past Friday. It had a very nice distribution. So we'll go over that and we'll use my spreadsheet to show where my current average is on that one. But first, let's just check out the Webull chart and see where PLTY sets. So here we are on the Webull chart. Now I've got PLTY already pulled up here, and I've got a couple lines here, and just to tell you what those are and what they're there for is I'm using this bottom line here as a support line, as that is where it has touched a couple times right here when it was coming down, touched it, went back up, went down, touched it, and then went up and shot on past the resistance line. And that resistance line is just the fact that's where it touched here, and it came up and just about touched here before it broke on past it. Then Thursday, it did come back down into that little zone area right before shooting right past that resistance line again. Now that candle is running through that resistance line, so we have not yet fully broke that resistance until we get a candle that will live above that resistance line. Now that does not mean that it will not come back down, but that just gives us a little bit more confirmation that it is a positive sign of getting above that resistance line. Now back here we had one, but it looks like it might have been a false breakout because the next day it did fall back down in this zone area. But of course then Friday we shoot right back up. So market's been kind of crazy, but we'll see if this can stay above this resistance line, and hopefully that then becomes a support line, and we'll find out on Monday of where it goes and what happens. So before we start looking at my average on PLTY, let's see how the distribution rate on the website is actually calculated. And this is the distribution rate that I'm talking about. And for PLTY, it says 96.82%. So some of the questions have been, how is that actually calculated? What do they use to calculate that 96.82% for the distribution rate? So let's just quickly do a little calculation and we'll see where that's actually coming from. Okay, so here we are on a spreadsheet here that I just opened up, and all I need is this information. I need the latest distribution. I need to know what that NAV is, and I will also need to know the number of distributions per year that the stock or ETF that you're looking at pays out. So for this one, we're using PLTY. PLTY. So the first thing we want to look for is the latest distribution. So we can look easily on our chart and we can get that information. All right. So we are looking at PLTY here, PLTY, and the latest distribution here is at 4.6556. So we'll enter that into our spreadsheet, and we'll just enter it in right here at 4.6556. That's the distribution. Now, for the NAV, we can also get that from the Webull chart as well. All right, so here we're back on the chart, and as you can see right here, NAV, and we are still under PLTY. That NAV right here says 62.51. So we'll take that and we'll enter 62.51 into our spreadsheet. So 62.51, and then we need to know how many distributions per year that PLTY will pay out. Well, we know there are 52 weeks in the year, and we know that PLTY will pay out every 4 weeks. So it's not necessarily every month, it's every 4 weeks. So it pays out every 4 weeks. So we can just simply divide those two by saying equals the 52 divided by that 4, and we get 13. So PLTY will pay out 13 times in 1 year. So we enter that into our spreadsheet, and once I enter this, it's going to calculate what that distribution percentage rate would be, and we'll see if the two match. So it's calculating 96.82%. And let's check out the website and see what it states there. 96.82. So we know our math is correct and that it is calculated as such. So let's look at the spreadsheet and let's see if we can understand what that's actually telling us. All right. So we know that our percentage rate here is indeed 96.82%. So we know we did our math right. So it looks like that the latest distribution of $4.65, and if you said that you will make that amount over the entire year, right, and there will be 13 payments because it pays every 4 weeks, and we know there's 52 weeks in a year, so therefore there's 13 payments. So if that $4.65 was paid out every single 4 weeks, you would get 13 payments of that amount. The NAV, which is net asset value. So that's the actual value of the stock. And you're using that as the actual cost or price of the stock itself. So assuming you're going to get paid 13 times of $4.65, you can see in our little calculation here, we're taking those two numbers, multiplying by each other, and then dividing by the net asset value to give us our percentage rate of the distribution. And to show you exactly what it is that I'm saying, in case it did not make sense, we can easily just type this in. And I'm going to round the numbers. So I'm just going to say that if you're going to get paid that $4.65 and you're going to get paid 13 times for the year, you will have earned $60.45, and you have the net asset value of the stock being $62.51. So you would have almost earned the value of the stock itself, and that value being $62.51. And you have earned in distributions $60.45. Now that NAV, the NAV, it will adjust per day. So that is a moving number that is not set, and that's why the distribution rate on the website does change daily. So at 100% here would mean that you would have potentially earned distributions equaling the net asset value of the stock. So again, this is just a prediction of the distribution percentage rate because this is forward thinking. And since you haven't actually earned $4.65 for the next 13 payouts, you are not guaranteed that that is indeed what you will get paid out. Could be less, could be more. So always keep that in mind. We're not guaranteed a distribution, just like the website states. But for me, I have no problem with it, and I'm not worried about it currently. So I just wanted to show how that's actually calculated. And that will give you the calculation of that distribution percentage rate that's shown on the website. And I hope that helped to make sense of what that actually is. Okay, so here we are on my spreadsheet. And as you can see, I've got PLTY entered into the stock ticker, and I also have my buy prices and my number of shares of each buy entry that I have made. It calculates the total amount that I've spent and then my distributions that I have earned while owning PLTY. Now for PLTY, I only have 35 shares and I've got about 2,100 invested into PLTY, which gives me my average share price is $60.59. We know the current price being 63 up here, so I am under the current price. Therefore, I'm in the green even on the share price itself, and that's share price appreciation, right? The distributions that I have made, I've entered each one into this column, and that total amount of distributions that I've earned is $847.69. I have not sold any puts on PLTY currently, so therefore that is a 0 amount earned. My total current invested value, all this one is the number of shares times the current value of the stock. So $63 times the 35 gives me the $2,205. Now, with adding my distributions or removing my distributions from my total capital gives me my capital at risk. So therefore, I call it my adjusted capital invested. So the amount I have at risk is $1,272.98. And if I use that number divided by the number of shares I have, that gives me my adjusted share price of $36.37. So I'm a good bit under the current price. My percent that I've earned is 39.37 off of that adjusted price per share. And if I was to sell the shares at the current price of $63, I will have earned $932.02 above what I have invested. So if I was to sell my shares right now, which I'm not going to, but if I did, then I would earn that $932, which is more than my current distributions earned of $847. Reason being is because I get to keep all my distributions, plus I have a price appreciation of the $60.59 to $63 of the current price times the number of shares I have. So as you can see, my distributions plus my price appreciation calculates over here for me of $932. And that is if I was to sell my shares. But I'm not selling my shares. So therefore, this is just a good number to see for me. But the one that I am more concerned with and the one that I watch the most are these numbers right here. My adjusted price per share and that percentage earned. So I am looking to get this percentage earned up to 100%. That would mean that I have received all of my initial invested cash back through the use of distributions and or any premium that I may have earned. So that is just the way I am playing these YieldMax plays. I am still buying here and there, and the more I do buy, the slower this does increase. But I am also wanting this to increase because this is income plays, right? I'm looking for an income of these YieldMax ETFs, but I do not necessarily want to have invested, $10,000 and only receive a very small fraction of that and still have a lot of money at risk. Now, when you first start off, that's just how it is. You have to invest in order to be able to create the distributions so that you can earn that income. But I am looking to get this number down to 0, this number up to 100%, and then every time I get paid a distribution, that is free and clear, and I can use that money to buy more of PLTY, to buy more of MSTY, to buy more of Microsoft, or whatever I want to buy, because YieldMax at that point will be just paying me just to buy stocks. And I can buy more of my YieldMax PLTY without increasing my risk. And to me, that's my goal. My goal is to get to the point where YieldMax is buying more shares for me instead of me using my capital to buy more shares. And again, you do have to start off with using your capital. But the end goal for me is to get to the point where YieldMax is buying more shares for me. So as you can see here, I am at about 39, almost 40% of my capital earned back. My money at risk is lowering the more distributions that I earn, and I would like to be able to start selling some puts, but PLTY has just been moving up so much, and I play it a little bit more on the safer side. I know there are people who are playing it hot, and you have to decide on how you're going to buy, sell, and play these option plays, how you see fit, and your risk tolerance. But for me, I like to play it a little bit more on the safer side. So I'm looking for entry points. And I'll do a video again on my entry points that I look for, in case you haven't seen that video. I just really wanted to show my position of PLTY, and I hope that it helps you out. So always make sure that you are keeping track of your adjusted capital per share price, because especially in these YieldMax plays, you really need to keep track of that. You really need to understand where your risk actually is. How much do you have at risk? Because sometimes when you're getting these distributions coming in, it can make you think that you're in the good, and then you find out that, you've still got a huge chunk of money at risk. And that's okay if that's what you're looking for, if that's the risk level that you're at. But still, it's good to understand and know. And that's why I use this spreadsheet. So definitely use a way of calculating that if you have that. And if you don't, you're more than welcome to download my sheet. And there will be a link pinned at the top of the comments. And there also will be a link in the description where you can find the link for this spreadsheet if you do not already have one or have made one yourself. So I think I'm going to wrap it up right there. Don't forget to hit that subscribe button and smash that like. It'd be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, legend out.